This is something I have observed. This is going to be important. So I'm making this recording so I do not forget. And I want to always go back and refer to this. Today's trading session, what happened today? Today is Friday. What happened is that we took London buy side because we had news today. Every time we have news, I always expect the Asia loss to be taken. I want you to notice something here. Every time you're trading, let me just go to the 2 minutes so that I can have a wider chart and show you clearly what I mean here. Get the point. So you see, this is it. Asia highs, Asia lows happen during market open. When the market opens here, it tells us to watch the first fair value gap in Asia. But you see, we open right here. We're in the middle. We'll either go up or go down. So where do we go? Come down and we try to take out this low. In this, so in this one tells us that we are going for the highs. Take out London highs. We expect a reverse. We had news, so we had to wait for the news. Whenever we have news, we expect Ajaros to be. Ajaros are taken up. Now we can the market intention go up. Yeah, so another one. Putting back everything is pretty much what I want to show you. I want you to notice. I'm going to go to the okay, so today here I was reading price action. Before news, I didn't know we had news, but I was just watching the charts. I was waiting for the exercise. I've always told you to mark out the inversion that takes out the what? By London buy side. The value gap that takes out that high is so important. And what I want you to notice that when we take out London high, is right here. This high here should act as support, take us lower. So we're not supposed to sell. Ideally, we're not supposed to sell because we had not taken out or we had taken out Asia buy side. I say that it's supposed to be that the high that takes out the sell side is supposed to be total soup or taken out. It comes to me that this high, the week's consequent encroachment. Now, I want you to notice something. I want you to notice something. This high is supposed to act as support for price to go lower. We are watching. Now, when we take out this high, thought we would reach up to this high, but we failed. We're putting in the now price has been bullish, and for narrative, Friday we expect it to form a wick. The candle has been open, low, high, so the closing price of the week. So this from here to here is this week. But today we were in between forming this week. That's why I was not so bullish today. In this inversion, this fair value gap. With order flow, you must know that after buy side is taken, expect this high to hold. See how it holds one, break below, and sell short with a market order because you know you have all this sell side. You could have sold, wait for this candle to close, immediately reject, you can sell because of this candle, stop loss just above buy side, and you can take it to liquidity. So we target liquidity. If you missed that, this inversion, wait for a closure below this inversion, sell. And the stop loss could be safe. We consider this inversion because we expect it to hold price lower. that. Wait for this one. See how we respect it close below, expect it hold price as well. And this is here. Because here we could sell because we've not taken out liquidity. Once we take liquidity like this, you stop chasing price because at any time it can turn around. So when we took out liquidity here at New York sell side, you see how this one in a candle, this candle immediately reject, and this one rejects. When you see this and you're in a trade, to exit. Okay? Because if you start reading price action, if you were to long this trade, uh, that would be a possible targets. What targets you target the previous liquidity. Like this high was taken out with this high. So this is what we call, some management traders call it QML. Okay? QML. And that they will put limit orders to sell here. So here we are watching price for the news candle. Dropped liquidity and closed below. Next candle failed. So we're supposed to mark this candle and treat it as a fair value gap. If we are bullish, we don't want it to reach the middle. We want it to stay in the lower quadrant. Once this candle closes like this, then we can be able to sell. Want to see a fair value gap, you can sell. Or if you're on the 30-second, 15 seconds chart, have some good entries. Now here market chopped after the news, market chopped. There are usually no opportunities here. People were being wrecked, but if you're on a 10 seconds chart, you'd be enjoying. Now when we reached previous monthly high, here you buy without thinking. And this candle is engulfing. Just buy at the previous day's low and you think price will go up before looking up? No. Buy and hold. Now the intentions for lower prices have been achieved. You take an Asia sell side. To miss that buy, you could get involved from here after this sell side has been taken out. You see what I told you, when this sell side is taken out, it acts as support for price. Buy. Just like here. Look for any sell side. Once this sell side is taken out, buy this. Okay? Acts as support for prices to go higher from here. That's one thing you should know. Let's look for more examples. Examples we don't have. We have this sell side has been taken out by this high. See how this one should act as support. Even we want to price not even reach up here, then we are sure that not. But the idea is good. Now let me take you to the 15 seconds chart. You're going to see something interesting. Now, when you're reading order flow on the 15 seconds chart, this is what I want you to focus on. I'm going to take you from let me begin with this price action right here. ICT calls, remember in his video called, when you see price jagged price action, we prepare ourselves. Like you see here, it is smooth, it's like dropping, but reaches here and it is jagged like a jigsaw, like jagged means like this. Price action was coming, jagged, like use sharp teeth, then you prepare yourself. But when you see price action is smooth, smooth moves, then the move is still going. Okay. But here you see jagged, even on the 15 seconds chart. So what happens is that you will start to anticipate an reverse. If you have a killer, you can get involved. Now we come. Try to take out this buy side. Hmm? I was watching. Market is almost closing. But we put in a value gap that is at a week consequent encroachment. At this point, we are just going to frame trades. When you see this first candle tap here, There's multiple rejections with this one, and we've not taken any sell side. We do not have intention. We cannot sell. When you see this volume imbalance, just sell and to take out this buy side. If it still comes, if this one comes, fails to take out buy side, comes back again, up here and reject, you just buy more. Now, once we take out buy side, told you that the first candle that takes out buy side is going to be acting as support for price to go lower. Okay, so you are watching price action, the 15 seconds chart that this one will fail take buy side, failed. Once we take this by this candle, we wait for this candle, close below and put a market threshold, reference to this buy side on the 15 seconds chart, then we can sell. If you are buying from here, don't go beyond this candle because price has already fulfilled its objective to the upside. Now it's time to turn around and form the weekly week. One narrative is that it's a Friday. We've been bullish the whole week. Now we need to put in a week, like a week of a candle. Here you can sell and hold your trade. Hold your trade if you can. No hanging fruit is this fair value gap here. Because break below here, and a break below here just because of these multiple rejections. Multiple rejections validate our fair value gap. Okay. I told you this high to act as support, and we don't want price action to even go big. So when price action reached this, now when you see this reject, we expect it to go higher. By the time we put in these imbalances, then we are showing weakness to go higher, and we are literally shifting momentum. What you do, wait for this one, break below this candle. This candle fails to go above. Next candle closes below this candle. Is this imbalance? And just go with the market order. And you can be sure that if you can hold, you can hold for more. You can be following order for hold. Notice how we break below. This candle comes and rejects. You can sell more here. Or you take out this high. You can always sell more as long as we've not taken out liquidity. That lower level, don't take out liquidity. But once we take liquidity, you're going to see what happens. Price action, but let's take an all liquidity. And you see how we if we belong here, the market was closing. That was PM session. Now let's apply this same scenario of take the high acts as the selling point that has been taken out, and we go to the New York AM session, which literally was chopping like nothing. In the AM session, we've already discussed it on 1 minute, but this is a 15 minutes perspective. In the 15 minutes perspective, look at it on the 15 minutes perspective. In 1 minute, we have our 1 minute fair value gap. Let me just do this. So prevent overcrowding. Let me just do this from here. I want you to go to 1 minute and you see what happened. Play. 1 minute. Came and put in this fair value gap. I told you fair value gap with multiple weeks validates a key level, such a key level. After we have sold from above here, because but I told you that once we take sell side and we close below, we're expecting bearish moves, we wait for it to return to a key level and sell. But now, let's change this color of this week. We treat weeks like fair value gaps. Now I want you to notice this week, and we're going down the lower time frame to read price action, but you're also aware of this version. Okay? When we go down to the 15 seconds chart. Seconds chart, what do we notice? I want to take it from the top. When you're reading order flow, this is our week. Told you when you're buying, the key level you stop. Now when price action reaches this key level, wasn't supposed to go above here, but because of news, okay, but this price action went like that. Okay. Now notice how, hey, this is a very huge fair value gap, but if you, the moment we see, and we see candles closing below such a fair value gap, me I always call it inversion after buy side. This is gonna be my inversion, and this price action is gonna respect this level at all points until it takes sell side. You can do this and you see. If it is very bearish, it will not reach even the midpoint of this gap. Okay? I was interested in this fair value gap, yeah, which is under 1 minute. Okay. 9:30 opens. We put in this FVG here. We have to look at FVG on the 10 seconds chart. 9:30. What do you think is happening? I've taken buy side. I'm not buying more because it is too expensive to buy. We are looking for sell side. Since we're even bearish, we need to put in the week of the week, a candle week. We also need to take extra lows. Then we are literally bearish. What happens is that we come, but this is 50 seconds, but the 1 minute 1 minute FVG touch a little bit below. Fail. So here it shows intentions to go lower. See this kind of price action. This one, which is taken out, acting as support bar, candles are failing to close above this level. This previous low is going to act as support until it takes out some bunch of liquidity. So once we take out some liquidity levels, you see how the liquidity retrace fail. See this take out liquidity at a key level with a huge momentum you can buy. Because we have this relative equal highs here, wait for them to be taken out and we shall use them as selling points later. I want you to see what happens. Why are we using them as selling points? Because we have Asia lows. Okay? Once we take this buy side, we wait for price action to return to these wicks, or we can put our limit orders right at this, at the previous buy side taken, stop loss above this week. We can set and forget. Okay? Notice how price action uses these points to sell from. If price action comes and takes all this liquidity, again expect it to come and take out this liquidity. Once this liquidity is taken out, we repeat the same process. This liquidity will act as a selling point. When price action is going to sell off, we can put our limit order, this order on this candle, close just above. Let's see what happened. What I told you, this is so consistent. You can hold until Asia lows because not taken. Once Asia lows are taken, at a previous monthly high, don't need to hold anymore. Okay, you repeat the same thing. Here is buy side taken. Here you just now use experience. Going to enter with an inversion. Inversion that taps into a key level is so important. This version is name it version after outside. We close above here. You took the entry from down here. You missed down here, you can always buy from up here. Stop loss just above. Buy and hold. If you miss the trade, do not chase price. Wait for minor sell side to be taken off. Like here, is acting as a buying point now. Wait for this lot to be taken out, and now it will act as a buying point. That's the logic. That the low that is taken out acts as a buying point for the price action on 1 seconds chart. That's enough for today. Learn something. Testing price action. Some things apply on 1 minute and any time frame. That's it for today.